Welcome to my channel. Today we will be talking about the best percentage of sales to use for Square loan repayment. If you're a small business owner who's taken a Square loan, you know the repayment is automatically deducted as a percentage of your daily card sales. The question is, what is the best percentage? The truth is, Square decides that percentage for you, and it's built into the offer when you accept the loan. You don't get to pick a random number. I've taken a few Square loans myself, and what I learned is that the percentage they offer, which is often somewhere in the 8% to 15% range of your daily Square sales, is a rate they calculate based on your processing history. They're essentially trying to estimate a rate that will get the loan paid off, plus their fixed fee within their suggested time frame, which is usually 12 to 18 months. From my personal experience, the best thing you can do is not worry about changing percentage, because you can't, but rather manage your cash flow around the rate they give you. Here's my actionable advice. Review the repayment rate carefully. When you get the loan offer, look at the repayment rate and the total fixed fee. You need to calculate if that daily deduction is something your business can comfortably handle, especially on slower days. When my rate was on the higher end, say 15%, I had to be extremely careful with my daily cash balance, because a chunk of every sale was instantly gone. The power of daily fluctuation. The beauty of the Square loan is that the dollar amount you repay goes up when sales are strong and down when sales are slow. That's a huge relief compared to a fixed monthly payment. When I had a slow month, I paid less and my business didn't struggle to meet a huge payment deadline. Don't fear the prepayment. The cost of the loan, the fixed fee, does not change, even if you pay it off early. I found that making extra payments manually through my Square dashboard was the fastest way to get the loan off my books. It gives you immediate cash flow relief and makes you eligible for a new, potentially larger offer sooner. I personally try to pay off a loan as quickly as I can, ideally within 6 to 9 months, even if the repayment percentage is taking me longer. Focus on the cash after. The best percentage for you is the one that leaves you enough working capital after the deduction. If the automatic repayment leaves your bank account too tight, it doesn't matter how fast you pay off the loan. You're hurting your business's ability to operate. In short, your goal isn't to find a magic number for percentage, but to evaluate the number Square gives you. Accept a loan only when you are certain your current sales volume can absorb that daily percentage deduction without choking your working capital. With that being said, thank you for watching. For more finance videos, kindly check my page. Please like, share, comment, and subscribe to my channel. Thank you.